Liberty Media, the company run by cable TV billionaire John Malone, has offered $1 billion for Barnes & Noble, the bookstore chain. Bill Kavaler is an analyst with Oscar Gruss Son. He's on the phone this morning. So, Bill, what does John Malone see in this business that everybody else doesn't?
I think there are a couple of things. First of all, the books business is actually quite profitable and doing quite well. Mr. Riggio has managed to...
You're speaking of Leonard Riggio, the founder of Barnes & Noble, of course.
And the CEO and effectively the controlling shareholder of Barnes & Noble. Has managed to create, a category killer and has managed to survive the rumored death of his category. So, from a bricks and mortars perspective, the company is doing just fine.
Some people would say, Bill, though, that the death may be rumored, or even if it is just rumored, it's inevitable at some point. Just yesterday, and you know as well as I, we talked about it earlier on the show, Amazon.com says it's selling more ebooks for the Kindle than it is selling books in paper.
But we don't have any idea what the profitability of those ebooks is. And that's the problem with the Barnes & Noble division. That's really an issue, which is their online business. And that's what's dragging down results, and that's dragging down everything, is their BN.com.
So is it possible that if Malone succeeds in this bid, and we'll talk about the likelihood of that in a moment, he may actually move to shut down the part of the business that competes with Amazon.com because of these profitability concerns that you raise?
It's possible. I don't know that it is that it's possible that he would want to do it. I don't know that you can do it. The issue is not so much stopping the online sales, it's stopping the losses of the online sales business. And if Mr. Malone thinks that he has a way of doing that, then he would do quite well owning or controlling Barnes & Noble.
Let's talk about the likelihood of success. We mentioned earlier that the bid was a surprise. Almost, maybe somebody knew it was coming, but the rest of the world certainly didn't. Is it going to succeed?
Oh, that really depends on Mr. Riggio and the board. Riggio controls a bit over 30%. That gives him, in effect, negative control. The bid was contingent on his participation in the buyout.
But wouldn't we have to assume, though, that he has given his consent to the $17 a share offer?
I don't know that we can make that assumption simply because he was not part of any of the press releases.
So that's something that has yet to come out. And one last quick question, Bill. The stock is trading at $17.60 in the pre-market above the offer price. Does that suggest to you that we'll see a bidding war? Barnes & Noble tried to shop itself before and couldn't find anybody willing to make an offer.
I would really discount the possibility of a bidding war. I would be very, very careful about paying these prices.
All right, so maybe a few over-enthusiastic shareholders out there. Bill, thank you for joining us here on the Inside Track. Bill Kavaler, an analyst at Oscar Gruss Son, on John Malone's bid for Barnes & Noble.